Final tax return. We can file up to 3 final tax returns for a deceased taxpayer. These returns are final tax return, rights or things return, and trust tax return. First of all, let's talk about final tax return. Rules for preparing final tax return are the same as rules for preparing any other tax return. There is no need to prorate non-refundable tax credits. All the incomes from January 1st to date of death must be reported on final tax return. When you start filling out identification area of T1 General, make sure to enter care of legal representative's name. Also enter date of death of the taxpayer. Attach a copy of the death certificate to the tax return. Now on final tax return, you will report employment income, again from January 1st to date of death, investment income which includes interest income and dividends, pension income which includes old age security and Canada pension plan. Just to note that the death benefit received from Canada pension plan, which is maximum of $2,500, is not reported on final tax return. The beneficiary who received the death benefit must report it on his or her tax return, or the beneficiary can file T3 tax return. Death benefit is taxable, but funeral expenses are not tax deductible. You may also receive a death benefit from employer for deceased taxpayer in recognition of long-term employment. If a death benefit is received from employer, first $10,000 of death benefit is tax-free. So the beneficiary will only report death benefit of anything over $10,000 if it's received from employer. Now a tax return must be signed by legal representative who has a valid will.